Hello folks, welcome back to the 66th episode of the Luganda series on YouTube. Here, what do I have? I have the central bank price delivery. We are going to start with the multi-currency manipulation. Then we look at the other things, but Ebija Beda once was central bank price delivery. There are so many things we're going to talk about. Now, these are my concepts. I repeat, these are my concepts. They are not borrowed from anywhere in a Forex book. They are not borrowed from any YouTube channel. They are not borrowed from any Forex website. When I lost a lot of money, I educated myself. And this is how I look at price. This is how I look at price. Okay? So I am also training you the same things that I know. Amalala aside, this strategy will not respect your trend lines. It will not respect your support and resistance strategies. It will not respect your lagging indicators. If you want to bring retail concepts here, I will say rest in peace. They will not help you out. They will not work for you. What do I look for before I jump into my favorite currency pairs? Because Vuliomo, I know favorite currency pairs. There are people that say, okay, I love the USD/JPY, I love the Euro CAD, I love the Aussie CHF, so many currency pairs. But here, we are not looking at what we love the most over the other. We are looking at how are these people manipulating price, the central bank. When you want to see the manipulation happen before your eyes, this is what you need to do. Subscribe to TradingView, a multi-view here. You can have 4 currencies. Okay, you can have 4 currencies here and the other 4 currencies on the other browser. Okay, that's what I do. I highly recommend you buying computers osobole okumonitoring a price at a go, not you jumping from this to this to this. Okay, it will not help you out. So that one aside, let's get started with the video. Before these folks manipulate price, they look at currencies, they look at fundamentals. Okay, they look at fundamentals. They look at currencies. How has this currency, how is it performing? How is the other currency performing now? Whether you believe me or not, it's up to you. But this thing works and it happens. And you will prove me right as you keep practicing this same thing here. Between sawa mukaga emisana, ekiro is a New York, ne sawa 5 ez'okumakya is a New York. Waberawo manipulation ku currency yongayo. You're not looking at a currency pair because you're going to take tears home, okay? You're going to be heartbroken once you're doing your analysis on a currency pair. Tugenda tusoma, we are learning, okay? We started with what a candlestick is. Tugenda wala. Jetulaga, I know, I'm sure most of you will like it. But retailers won't like it though, so. I have the highest point of interest here. I'm not calling this the Asian dealing range high. I also have the lowest point of interest here. I'm not calling this the Asian dealing range low. Okay? I'm calling them the highest points of interest, and I will explain to you why. What time of the day am I looking at this currency to be manipulated? Now, amaso kulutimbe, have your eyes on the charts. If they want to make a lot of money, if they want to manipulate currencies, these currencies will be manipulated at the very same time. Okay? Sawa ze nyine, the same time, the same minute, the same second. That's why if you are not doing what? if you are not subscribed to these brokers, these service providers that will give you a multi-view, you're going to miss out a lot. And once you miss what is going on with the currency, you're going to find yourself chasing price. Here, I do two things. I look at which currencies are being manipulated at that particular time. If I have the euro as my base, I will wait for the euro okukola emikolo jayo between sawa mukaga ezemisana, ezekiro, the New York time, and 11 o'clock in the morning. What happens if I want to trade the euro dollar? So how do you know that price is being manipulated? How do you spot that, okay, wano tugenda kola sente? Let me say, for example, these people want to make a lot of money ku Euro USD. These two currencies will be manipulated omulundi gwegumu. These two currencies will be manipulated at the same time. What happens here? The euro will rally. It will give us a false rally, which is the manipulation above the highest point of interest here. Whereas the dollar will also give us something, the opposite of what this one is doing. And I'm sure you're going to witness this same thing as you keep doing Chino Chengendo Kulagamo video. You are not doing your analysis for currency pair, no. You're doing your analysis for currency separately, okay? This currency and this other one. As the dollar rallies, as the euro rallies, you're not going to look for a consolidating currency at that time, no. You're going to look for the other currency that is falling at that same time, at that particular time. Ezo sawa zenyini nyini. Okay? It should be like a mirror. If this one is rallying, let the other one drop. That is the currency those are the two currencies that they are going to manipulate, and that is where they are going to earn a lot of money. They are planning to make a lot of money from that currency. What do? Wait for the base. Wait for the base to first take few things out, like here. Trades above the high, whereas this one can also trade below as well. Then what do? You're moving with the base. This time entries was called our. You're not doing your entries ku order blocks. You're not doing your entries more imbalance. You're not doing your entries ku supply zones, not crossovers, not waiting for indicators to turn pink, not waiting for alligators to have their teeth, do this and that. You're waiting for institutional levels. Let's scroll down here. 101C, I have something small for you. Before we jump to the charts, we should first look at this. Time and price for liquidity. We are looking at the 80 level and the 50. Now this is the currency pair. After you've seen the currency index do this crazy move here, you are now moving to the currency pair. If the dollar runs above, the euro, if the euro runs above the highest point of interest, your entries should only be where the central banks are willing to sell, to buy. And I'm going to explain to you why they are buying here. I'm going to explain to you why they are buying here, why they are not selling, but they are buying. You're waiting for price, it takes that high out. It comes back to an institutional level. Remember this, folks. You are not chasing price. What is chasing price? Oh, price emaze kutwala highest high over the highest point of interest. Let me sell here. No way. That is not how the system works. The system is, let's sell. What are retailers doing? they are selling as well. What are they doing? They are chasing price. Once you chase price here, because olabye, okay, etandise okukirira wansi, let me sell, you'll be kicked out. Why? Because they are still coming where? To institutional levels to sell. Nchidamu, wait for price to break through or to trade through the institutional level. Once price comes back to that institutional level, that is your entry. That is your entry. You're not going to sell here simply because, okay, you're not going to sell above this high. That is being unprofessional. Anything can happen in the Forex market. You're doing this on a currency pair, not on the currency index, on the currency pair. The high taken, we are selling, comes back to the institutional level. Or the smart trading entry. Which one is the smart trading entry? 70 and 40. Let me explain to you why I chose these ones. Because ngawe nkugambye, I've been in this business for a very long time. And I used to ask myself the same questions that you're asking yourself. Why 70 and 40? Well, 70 is below, it's the next level below 80, and 40 is the next level below 50. Why are they smart trading entries? Because this is where smart money will sell if they don't want to bring price to the 80 level. Why? Because they are people like you and I that know that, okay, I'm coming to the 40 level, the 80 level, you're putting your sell stop. Okay, there are these people that want their trades to be triggered automatically. Mbasaside. These people are getting smarter and smarter and smarter each and every day. And if you still want to wait for price to come, trigger itself, and you're in the market, rest in peace as well. It doesn't work like that in the Forex market. It only works like that when you're trading Bitcoin, when you're using support and resistance and indicators. But once you're looking at the multi-currency manipulation or the central bank price delivery, you want to watch your entries. You want to be there, trigger them automatically, not manually. You are selling here, price drops, you're making money. It rallies again. You're looking at entries between Sawa Mukageza, New York and 11 o'clock in the morning. This is the London kill zone here. And this is the New York open. It might be here, it might be here. I don't care. But as long as I'm looking at price between 11 and midnight. Wano, wano, it drops. It comes back there. Most folks are closing their trades because they know that, okay, even to jiwunye, then it continues down. It will not come up, no. Teja kuda wagulu. This small move from here to here was the manipulation. Above this high, what we call it the manipulation, or GT Asian dealing range high. I know this video is taking long and you're getting bored. Let's look at the bearish structure before we go to the markets. It is vice versa, okay? We have this low taken here. Price rallies. It is coming back for them to sell. Now, they are selling here. They are not buying. If it's a currency pair, they are selling here. They are not buying. Why are they selling here? Because it is you to buy. And once you're buying, who are you buying from? You are buying from the smart guys, from the central banks. You are buying from them and they are selling to you. Very simple. Because they can't buy and you also buy, you know. Why you know beda wo muguzi na atunda for the transactions to go Okay, so right here you're buying here, you again the same thing. Kankutwale ku charts, I show you what to look for, how to do it before we find ourselves having a 45-minute to 30-minute video, which I don't really like. So here I've selected two currencies that most folks love to trade. We're going to have so many examples. This is the euro, this is the dollar. We have this consolidation here, which I told you to always look for. Once we have this consolidation, we're going to look for the highest point of interest. We have this high, we have this high, and this high here. Let's go ahead and mark those highs. So why are we marking the high? It is because the euro is the base. This euro is my base here. What time of the day am I looking at price? Between midnight and 11 o'clock in the morning. Let me also mark midnight and 11 o'clock in the morning. So this is midnight. Okay, that is midnight. Let me also mark midnight ku base, ku euro. Okay, that is, okay, that is midnight. That is which day we're looking at? We're looking at this day. This is 5th. This is 4th. Okay, so midnight, 4th, midnight, right there. So what are we looking at? We are looking at the highest point of interest, which is this one here. We take that high around what time? At midnight. Okay, past midnight we take this high, the highest point of interest. Okay, you'll see the same thing happen ku dollar as well, but once you see this one, okay, where is the manipulation? Once you see at this time 45 minutes past 1 o'clock in the morning, that's when we have this candle after running above this high. 45 minutes past 1 o'clock in the morning, this doji here, kano kakando ku dollar, I'm looking at this kakando, this small candle here, this indecisive candle here. You're going to have candles buying this side, you're also going to have candles selling this side. Now, if this one happens after trading above that high, I'm going to show you another example before we trade above that high. What happens here? We take those highs past midnight, we drop. Those are this is the rally you see here. It rallies. Okay, you're looking at time and price, 2 o'clock. This is 2 o'clock. This candle here, we drop. Okay, you see this sign already. We are selling after taking those highs. Here we are buying ku euro dollar. Sorry, ku dollar currency pair, currency index rather. It buys here, consolidation. It drops, consolidation. You see this green candle, this wick here. What time of the day is this? This is 3 o'clock in the morning. Sawa mwenda eza New York. What time of the day is this? 3 o'clock in the morning. This one drops, this other one buys. This is when you're doing your analysis like this. Highest point of interest here. Do we have the highest point of interest, the lowest point of interest ku dollar? We don't. We don't. But simply because price is being manipulated at that same time, you're seeing those candles do, you know, the rally and drop on Mulundi Gumo, you're going to put your eyes there. Let me show you a currency pair. Let me show you that currency pair. Let's look at the euro dollar. You're looking for entries, smart trading entries between 40 and 80 levels. Okay, so let's come back here. You want to have institutional levels. Don't care about this yet. Don't. Imbalances, they won't help you. Order blocks won't help you. Here, the only thing that will help you to enter the market is the what? The institutional level. Let's look for a 50 level around that area and the 80 level. So here we have the smart trading entry, but let's first look at the 50 level. There. Did price come to that level? It didn't. Then let's look for the smart trading entry, which is the 40 level. 40 level. Did price come to the 40 level? Now, do you remember what I told you? Where exactly? If I come back here, we said if we are selling above the highest point of interest, this is the currency pair. We want to see it trade lower, then come back to either a 50, 80 or a smart trading entry. This is what I want to see. I don't want to chase price. If you come back here, what happened? Trades above these highs, drops below. This is enough. Comes back. Which level is this one? This is a 40 level, the smart trading entry, not the 50. 50 stopped price. They sold here for smart trading entry. Oh, it is an imbalance. To me, it's not an imbalance. I'm not going to use those concepts of imbalance and order block yet in this series. Because tugenda tukula, okay? Tugenda tukula na nyo. So we're not going to use those strategies here. Imbalance, this and that. You sell here bulungi nnyo nga toyina gukoseza. Why are you doing this here? It is because price is being manipulated. So what am I going to do to this price level? Now, since the pound is my base, ngenda kola whatever the base does. I'm going to be ready. At exactly what time? As soon as I see price trading above here. Nadalanga, we have the news. I am going to look at this. What time is this? This is 3:30 o'clock in the morning. When you come back to the Japanese yen, what time of the day is this? This is also 8:30 o'clock in the morning. So this is what you want to do. You want to see both of, because okay, these things happen. If the big boys are behind, the manipulation, this is what happens. You will see this currency panicking to buy, the other one panicking to sell. What do you think is happening? Retail traders are seeing, okay, they are chasing price here, okay? That's why I tell you not to chase price. Retailers are chasing price. They are seeing long candles and they don't want to be left behind. So here most retailers are buying because they are seeing candles being engulfed. That's why you need to invest in buying computers, okay? Ofune computer nga zikulaga quotes, then endala nga zikulaga the basis. So right here, I see this one drop. This other one is buying. Am I going to buy here? No. I am using this one here. Remember this. If these people want to make money on this day, they will manipulate price. That's why you need to look for a consolidating currency. You're not just going to enter anyhow. You look for a consolidating currency. If you are watching the Japanese yen as well, as a currency ojja giraba ng'ekola ki nga at that same time, as soon as this one starts misbehaving, just know that that is a perfect pair for you. That is a perfect currency for you. How do you notice? You're going to see this one rally and this other one drop. At the same time, they are doing what? They are manipulating price. They are about to enter the market. Remember, I told you, for them, they are not looking at a currency pair. The big banks are not looking at a currency pair. They are looking at currency indices. They are looking at this index and this one. So which one are we manipulating? Let's manipulate the pound yen. Let's manipulate the pound this. This one buys, this other one sells. At that same time, at that exact time of the day. Well, that's, you need to have a multi-view, okay? You need to have a computer showing you all the currencies, how they're behaving. If possible, jangu nkuwole, you buy computers, but nze bwenakubanja nze manja bubi nnyo, so you may not like it, but invest in computers. You see this one, just I've told you what to look for, okay? That same time, you want to see two currencies misbehaving, know that that is the currency pair for you. Okay, as soon as you see two currencies misbehaving, one buying and the other one selling, you need to consider which one is going to be your best. So look at the Asian range, high and low. It runs above that, this one drops. Where is this one trading to? Well, this one is being manipulated. The Japanese yen is being manipulated to trade this one, to make for them money here. Because this is the best, we are going to jump to the currency pair. What time of the day are we looking at? We are looking at 8:30. Sorry, 3:30 in the morning, the New York time. Which currency pair? We are looking at the JPY. We are looking at the pound yen. We are only using institutional levels for entries. We are not chasing price. We are only looking for institutional levels for entries. So this website here, ejja kuyamba okukola analysis. You're only going to analyze the market using this software, this website. Entries, you're going to mark institutional levels on TradingView. So let's go to TradingView. We are going to analyze the pound yen. We are only having entries to institutional levels. What time of the day? 3:30 in the morning, the New York time. Bw'oba tobitegedde ojja kudda kweno currency yennyini nyini. So let's look for the let's look for the pound yen. GBP, JPY. So this is the GBP, JPY. Let me delete all that stuff. So what time of the day? We're going to mark midnight there. Okay, we're going to mark midnight there. What price levels are we looking at? We are looking at this one here, if you remember. We're looking for a 50 and 80. These are, what are these? These are institutional levels. Smart trading entries, 40 and 70. Go and look for smart trading entries on Google. You will never find them anywhere. You will never find them anywhere. These are the concepts I own. Nae amalala aside, let's move on with our analysis. So, between midnight and 11:00 in the morning, the New York time, I am only looking for entries between this line and this one. Entries to institutional levels only, or smart trading entries. Now, since you already know what is happening on the currencies, like right here, you already know what is happening. You already know that, okay, this move up is a manipulation. This pound wants to run above the Asian range here. Ku base, if this is your base. Okay, if that is your base, oh sorry, you didn't see that. I was referring to this here. The pound wants to run above the Asian range high here. So you already know that this move up is a manipulation. Let's go to the currency pair. Now let's insert in, you know, the institutional levels. So what are you going to do on a currency pair? Ku currency pair toyinako business indala yonna other than entries ku institutional level. On the currency pair, you're not going to look for Asian dealing range highs and lows. The analysis is already done on the indices right here. You already know that this one is running above these highs. Now, on the currency pair, you are only having your entries to institutional levels. Leave the Asian dealing range highs and lows. Because if you are to look for Asian dealing range highs and lows, Asian dealing range high. Will price ever come here? No, it will not. Okay? So you're only focusing on the base. Between this time line and this one, I'm going to look for institutional levels. I'm going to look for that level. Let me reduce the thickness. I know this video is going to take long, which is okay, because you need to learn these concepts. So let's look for a 50 level. We're going to look for institutional levels, so let's look for a 50 level. Like, enter. Okay, you're only having your entries, institutional levels, or smart trading entries. Now, what time of the day? This is 3 o'clock in the morning, the New York time. Right here. This is your entry. Are you going long or short? You are going short. You're not going long. You're going to sell here. Oh, mentor, there are long candles here. This one was engulfed. I see a higher high. I am afraid of selling at the 50 level. You're not selling at the 50 level because of any other reason. You're selling at the 50 level because the big boys have taken liquidity, £1 right here on my left hand side. Let me mark that area for you. There. This is where you're having your entry. Above this. As soon as we trade above that. Now, what time of the day? 3 o'clock in the morning. You're just using these ones for your analysis, then your entries to institutional level on a currency pair. Because if you want to have institutional levels on this currency, now let me show you. This is not an institutional level. These are just, okay, prices from this website. We are going to learn about pricing in the future videos, but here I don't want to confuse you. So around here, Newononya 50 level here, you will never find it. You're only looking for institutional levels on these currency pairs here. Now, if you don't trust my concepts, then it's okay. Leave them. The other folks that know what they are looking for, they will take them. Where are you putting your stop loss? You're going to put your stop loss on the next institutional level, and that is if you can afford to lose that money. So let's see where you put your stop loss. Anyway, I am not here to advise you where to put your stop loss. Guamani, if you want, you can put your stop loss up here. How many pips are these? These are 260 something pips, and they are folks like the other ones I don't want to mention. They are really capable of doing that. Okay, jokes aside, I love joking sometimes. You're selling there. I'm not here to advise you where to put your take profit and stop loss. I'm just showing you how to enter the market. I'm showing you how to get smart trading entries without panicking, without, you know, having any problem at all. I don't want to waste a lot of your time. I don't want to waste a lot of your time. If you don't understand this concept, you can rewatch the video till you understand the concept. I hope this was insightful. Let's stop this video from here.